Okay, ladies and gentlemen, so now it's time to continue our journey in the field of international financial management, but especially I think I spend way too much time about rackets and corporate valuation. So now we should check and move to the next major section of the lecture notes, which is somehow, for some reason, it's stopped here. So, when we are checking the lecture, the Jeff Madura book about international financial management, then the next key element is about corporate defaults. But they have a really strange approach because the book is only focusing on country risk analysis, how can we select proper countries to settle in, and after that they don't care about corporate specific factors. So that's why also as a reason I had to extend this further. So in this section I will talk about not just country risk analysis, but also how different rating agencies like Standard & Poor's are evaluating countries, companies. So what are the corporate specific risks? And also after that I would like to show you two metrics. One is old, the other is even older, but both of them are still used in the industry. And after that we will check also that if we are looking on the current approach, so which variables are preferred by or for credit rating. People are doing it, or at least in Refinitiv Econ we will check actual data, because it will be useful for tomorrow when still we have to finish the first assignment, then begin the second assignment, and that's why it will be necessary to see not just the value of the company, but how probability of default also develops in time. Then we have to think about such a case, because obviously we have to improve the value of the company, but we have to mitigate risks to avoid higher probability of default. So obviously we have to do both things. Okay, in the country risk analysis, still the book thinks about many different approaches. Again, the book says that if we can identify higher risk in case of operations or future operations, or if we have to think about that, do we want to continue our operations in this economy? Still, there are multiple ways how can we step on a foreign market. One possible way is that, okay, we are just exporting there, or we are maintaining some kind of a distribution system, so not just the services are moving into this economy, but also we have some subsidiary there for providing additional services for maintenance, repair, and other things, but the core product is manufactured and sold by our parent company. Also, we can say that if this market is big enough, then we can create a subsidiary there, which is also providing or manufactures the key product of our company. So we are not just exporting it anymore, we are moving also know-how. And the question is that how funding is provided. So if we are absolutely, if you have high trust, at least in this country, then we can say that, okay, all of the funding is coming from the parent company. Maybe the parent company can provide they can take up loans at lower interest rates at home, and then this money can be invested as equity. Or we can say that some of this will go as equity, some of them will be provided as long-term loan. Sometimes they are not even asked for interest. for that one, but in many cases they are saying that, okay, let's provide a 10, 20-year long variable interest loan to the subsidiary. In this case, this can be also useful because if the company is not profitable, still interest must be paid. So this is how we can recover some of the profit. Or if the corporate income taxes are high and they don't want to be so profitable in this country, then again interest can be useful, because in this case we can set or increase or decrease the interest rate of this loan from the parent company, and this is how we can siphon out profit. Or if we can say that political risks are higher, then usually what we can do is that we should try to insulate against political risks. So we can say that, okay, this subsidiary should use local funds. Because even if the company defaults, or the subsidiary defaults, or if it would be nationalized, or somehow we are kicked out from this market, then it will be their problem to deal with this. Especially this is the case when all the manufacturing line is operating with the software. Obviously, nowadays everything is driven by a software, and if we are revoking the software, then they have only shiny metal pieces and equipment. They are not able to use it, so we can brick the whole factory. So even if they are nationalizing it, then be happy with that. So after that we can remove all interest from this country perfectly. But in this case, it's necessary to use also local funding. So we are funding the company through equity until some point, but otherwise we are taking up loans from local banks. So in this case, we are trying to localize also the whole balance sheet. And maybe we are just selling their usually the highest value-added component. So when Sharp had really high market share 10 years ago in the TV market, smart TV market, they had manufacturing plants in Poland, in Mexico, and somewhere else, I think in South Korea or in China. And they were manufacturing everything, their motherboards, or the frames, and so on. Two things were coming from Japan. One was the screen itself. So that was the highest value-added component, and also the software, which was running on the TV. So in this case, they were able to say that, okay, anything happens at one of the manufacturing factories, then still the highest value-added production is still at home, and it was also really useful because just transporting or moving the screen components, you have to move way lower amount of material or volume and mass than if you have to sell all the finished TVs and screens. So also it's quite obvious that we would like to minimize also logistic expenditures. Or if we can say that we don't want to step on this market, but it can be highly lucrative to sell our know-how, then this is where we can create or we can sell licenses. Maybe we don't want to purchase Merlin engines from SpaceX for nice US dollars. We can manufacture at our own, just we are buying all the blueprints and other know-how for manufacturing these specific engines. And after that, after each manufactured engine, still we have to pay licensing fee. So it's not free to use, but obviously we can decrease related expenditures. Yeah, because you are running from battery, that's why it's enthusiastic to turn on. Yeah, so or also the last thing what is mentioned by the book is the joint venture. So we have to look for a local partner, and then we are creating a joint venture company. We still uses our trademark and so on, but local player can be really useful if there are huge administrative boundaries. So it's really hard to step on the market because this market has really unique regulations, requirements, administration requirements. So that's why it's much easier to get someone who has expertise to operate already on this specific market, and they will be really happy to get the know-how of manufacturing a popular product, and it's way better for them than instead of developing their own product for the same market. In this case, they can get everything already available. So obviously in this case we have to share the profit, but that's why there are different ways to go to a market. And obviously, since we are in the Trump era, then we have to consider tariffs and trade agreements. So if you are checking the internet, we can see that similar things happened already during the 70s, when the US was absolutely afraid of Japanese car manufacturers. So automotive industry was in a terrible shape during the 70s. So in 1 hour in Great Britain, they were able to manufacture, in Great Britain, they had one monolith car manufacturing monopoly until the 70s. So all the different brands were merged together, and still they were able to manufacture only 100 some cars. So it was in the scale of hundreds. In the US, they had higher productivity, so we can talk about 1,000. And in the case of Japan, it was more thousand, so it was nearly 10,000 cars. So obviously, if there are huge differences in the level of productivity, also, since obviously Japan is not so rich in oil and other commodities and raw materials, that's why they had to manufacture already really efficient engines, which was not the case in the US. So, but when the oil price shock happened during the 70s, obviously everybody became much more motivated to buy fuel-efficient cars. So suddenly consumers were changing their taste. Already they were motivated to buy Japanese cars because of their fuel efficiency, also because of their price, because higher scale of production. And obviously then the government started to raise tariffs against Japanese cars, but after some, so if we are reaching some levels in terms of exporting, so you have to move cars from Japan to the US market. So you have to travel through the whole Pacific Ocean, and Pacific Ocean is not that Pacific. So obviously there are storms and so on. So you have to move literally the most sensitive asset or product through the ocean, which is absolutely corrosive, salty, and so on. So you have to insulate all the vehicles, or somehow you have to save them from this corrosive environment for days or a week, or more than a week. At the end of the day, you should open a factory in the US. So if you would like to reach some scales of efficiency, if you would like to increase your sales in the US, it's much better to manufacture them there. This is what not happened in the case of chip manufacturing. So Japanese companies also were dominating in case of DRAM and other chip components during the 80s. And at that time, they made a contract that it was limiting the export. So in this case, it was a voluntary export limitation contract, and they were saying that, okay, after these numbers, we are not selling more on the US market. Still, DRAM business was completely wash the way. So nowadays we can see in Japan or in the US, there are 3 or 4 companies which are operating in this industry because, again, economics of scale. So you have to have really good yields, and also you have to manufacture a lot of these products, because otherwise margins are so small that it would be nonsensical to go there. So country risk analysis has these benefits. Now we are here. Now you can cooperate. Yeah. So the book says that, okay, we can do scoring, we can do interviews. Obviously, before we are starting anything, we should visit the local government or visit some investment agencies. We should negotiate with them. Multinational companies are really good in this, so they are running a competition between different countries to look for their newest locations. So, yeah. But if we are checking rating agencies, then we can see that, yeah, and this is only for non-financial corporations, obviously not banks, because they are absolutely special. But when we have to not just to focus on countries, but the companies itself, then obviously first is business risk profile. So the standalone credit profile will be first determine that what is happening there, what is happening in this industry, and because at the end of the day, this is highly relevant for us. So first of all, industry risk. How cyclical is this? Because if there is huge cyclicality, especially in the IT sector, at least in hardware manufacturing, it can happen easily that we are building up some manufacturing lines, then there is some kind of a boom in manufacturing also elsewhere, then suddenly the whole market is flooded with RAMs or processors or something else, or the other problem is that it's not just supply-related cycle, but also demand-related cycle. So we are not buying computers in every year. So also if we are focusing on the high value-added business-to-business segment, still companies are also changing their hardware within cycles. So they are running tenders in every 3 years, every 4th year, at this university every 8 years or something like this. So my old computer, which operates in my office, I'm using it because it's really useful, because I can put this computer on the top of it. It's 10 years old. So obviously there will be cyclicalities because of procurement procedures. Even if we are focusing on business to business, not business to customer segments. So we have to be prepared for that one, because in this case, if demand is appearing with this cyclicality, then sometimes we have to produce for the warehouse, for storaging stuff. Sometimes they will buy everything. So and also sometimes exogenous shocks can create cyclical features. So one of my friend, a really good friend, is working at a bicycle shop in Szeged, and during COVID, their sales were increasing by 30%. So there was a huge boom for bicycles. And also, after that, I was kayaking also with a guy who operates or runs a bicycle manufacturing plant in Hungary. They are selling bikes for Decathlon and also for Ocean. And he had the same experience. So suddenly, Shimano and all the component manufacturers were facing a big trouble, because all the components, so chains, switches and everything were purchased by manufacturers, but also by the retail stores, because suddenly new bicycles were needed, and also to maintain. The maintenance need was also increasing. And this happened for 3 years. So now they are saying that, okay, now business went back to nominal. So now the demand is still the same. Other cyclical feature can be when there is an innovation, sudden innovation. Again, in case of bicycle, nowadays everybody would like to buy e-bikes. So I remember that the first time when I was cycling to Switzerland, many, many years ago, when my wife was working there as a researcher, an old lady in Switzerland was overtaking me when I had to go up here. Okay, I'm from Szeged, so it's not that hard to overtake me on when I have to climb up on the mountain, but that was the first or second time when I was able to see an e-bike. That's okay. She was already buffed up, but with electricity she was even more efficient. And so in this case, this is what we can see nowadays, that now everything is full of e-bikes. So premium or close to premium brands are now moving into this segment because they can sell batteries, they can sell all the stuff which for me is not necessary if we are working here in this area. But if we are in the mountainous area, it's still for me it would be not necessary, but many people like this, so they don't want to tire so much after a day of ride. But in this case, we can see that now there is a huge demand for these products. I can get always feedback that how sustainable is this? Not just environmental sustainability, that sooner or later all these batteries will go to the dustbin, because this is where we have the regulations. And this will be also somewhere there. That what kind of regulations can we have? Maybe when we are opening our e-bike factory, we just manufacturing everything because the government is too lazy to make regulations. But 5 years, 10 years later, they realize that, okay, we have to do something. And obviously they will push this recycling, mandatory recycling on the manufacturers, because come on guys, you were living happily from this profit. So now you are forced to recycle. So old batteries and you have to focus on such services. So this will not just extend our operations, or but it can create higher costs for us. So now the European Union has this, one of its EPR, the other is something starts with D, doesn't matter. So nowadays the manufacturers have to provide some kind of revenue, which will have to be paid to some government agency, and then from this revenue the government agency should and supposed to organize all the recycling procedure. So this is the new thing, and obviously this is contributing to a special kind of an industry risk, because still in Hungary now they are increasing this kind of contribution, which is bad for many businesses, obviously because higher expenditures. On the other hand, yeah, it's part of their job. Then, competitive risk and growth environment. So, what are the barriers of entry? What kind of licenses do you need? And also, what kind of specialized technology do you need? So, in the case of logistics, to have a road logistics company, you need a truck. So, some guy with a license to drive this truck, but otherwise it's quite low barrier. That's why also the margins will be also really low. If we are thinking about railway logistics, then It should be simple, because if you get operational license in any EU member state, then it has to be accepted as well. So if you are operating from Hungary, you can work. In other countries, the problem is that homologization is a big thing. So your locomotive should have a license to operate not just in Hungary, but also in all the neighboring countries, and it's absolutely country specific. So all the safety systems, they should be harmonized, because the ECTS system should operate everywhere on the continent. The practice is that now only locomotives with the ECTS system can provide cross-border services. So this is the new thing in this year, or maybe from next year on. But for example, in Hungary we are using AVM, the Austrians are using a different system. In at least within the region, so within Poland, Slovakia, Czechia and Hungary, people are using Mira, which is at least some kind of a joint system. Just the problem is that if you would like to have a cross-border locomotive, it will look like as a Christmas tree for the different, or to meet the different national requirements. And also the ECTS, so you can buy ECTS equipment for train safety from Alstom, from Siemens, and from there is a AZD Praha, which is a smaller manufacturer, but they have but they have different specifications, so they are not that standardized. And according to industrial rumors, also sometimes they have issues. So sometimes they are just stopping trains because they are thinking that they were running through a red sign, but there were no red sign nearby. So still there are issues there, but obviously in this case the barrier of entry is way higher. And this is a problem, because what we can see nowadays that the EU always says that we should move, or at least we should reorient logistics sector towards railways. And what we can see that the mass of goods which are moving on the railways are decreasing during the last years. So, yeah. In our specific case, so if you are thinking about the case study, a specialized logistic entity, because we are still moving stuff, just not on rails, but on rockets. Obviously, there are huge barriers. So still we can say that, okay, we should not develop anything, we should just integrate components. Instead of manufacturing PCs, laptops, we are manufacturing a rocket by already existing components. We just have to maybe write the software, but if we are efficient in outsourcing also, we can buy this or license the software for us. The question is that still we need launchpad, which is quite unique. Also, the location of the launchpad is can provide us benefits, because if we are close to the equator, then we can launch higher mass. If we are far from the equator, then we don't have to transport everything to the equator, to French Guiana or elsewhere. But also we need safety or hazard zones should be declared, that obviously in the time of launch nobody is allowed to fly in. If things are exploding, then also debris. So all the so there are extended hazard zones which are closed down if things are starting to fall back to the atmosphere in case of an explosion. So in this case, this part of the airspace will be also closed down. This happened frequently this summer when SpaceX was exploding here and there around the Caribbean Sea. So it has many different barriers of entry, and also we need launch licenses. So the national agency should be able to provide these licenses frequently. If there is a mishap, then also they should be able to help the investigation. They should be able to accept the changes in time. There is always an ongoing fight between SpaceX and the FAA in the US because FAA tries to slow down things, and SpaceX would like to launch and earn money. So it's always a problem and always an issue. How can you deal with regulators and regulator bodies? And it's really good until they can articulate that what do they want. The problem is that when they are just appearing that I don't like this or I don't like that, but you have to come up with solution which maybe we will accept it or maybe not accept it. Yeah, what are the industry problems? And this profit margin will be related. What is completely missing from here? Somewhere there will be there. It will be there. It should be there. That are you operating on a competitive market, on a monopolistic market, or do you have a monopoly, or some kind of a niche market where you have monopoly? Because obviously it will determine your profitability. That if you are unique enough, then you can say that now it's an oligopolistic state, or if you are in a really specific niche market and nobody would like to step in because they need a lot of investment, or they should need a really specific know-how, and nobody would like to care about this one, or the customers are so fond of this product that they don't want to change. So we can say that, okay, there are many different Linux distributions everywhere on the planet, but where we can find Linux only in phones, tablets, in terms of Android. So in case of PCs or laptop businesses, still we can say that Windows is the standard. Or even in ATMs or even in locomotives, we can see Windows 10 or even earlier versions, just the stripped down industrial version, not the desktop version. So this also supports the barrier of entry and the industry profit margin. Oops. Also, industry growth trends. As we were able to see, orbital launch businesses doesn't scale up. So right now we can see that, okay, some companies are eating up the cake, but usually the size of the cake is not growing so much. We can see that launch numbers are not increasing. What we can see that mass of the cargo increases and the number of elements or satellites which are launched, this is what is increasing because satellites became smaller, they are lighter nowadays, so we can put way more on the top of a rocket. So SpaceX has these transporter missions when they are sending or launching more than 100 satellites into space, or at least low Earth orbit. So in this case, it's absolutely packed up fully. But in this case, you can just send the cargo into space for less than $1 million. So it's really efficient. From corporate point of view, the problem is that you have to put this cargo together, and we can say that there is growth in terms of mission numbers, but otherwise in launch numbers we can't see. Okay, competitive advantage. Are we unique or not? And how unique we are. Okay, scale, scope, yes. Operating efficiency, profitability, I mentioned these ones. Then the other thing is the financial risk profile. So how much money can we make and what kind of funding is provided for that one. So cash flow to leverage analysis. So leverage, it means that debt to equity ratio, and if you have low debt and low cash flow, it's no problem. The problem is when we have low cash flows but high debt. This is what's called as zombie firm, when we can see that they are barely operational but still they didn't default it because somehow they avoided it, but otherwise they are not contributing to the economy at all. And that's why they are using these funds from operations to debt ratio or debt to EBITDA, or they are checking that, okay, how can they pay back the existing debt, and cash to interest ratio, because the other problem is that we can have high debt. But what is the maturity of this debt? So if we have to just repay something within a year or 10 years later, obviously there will be a huge difference. The other question is that, so the frequency to renew the debt can be a problem. The other problem is that, is this a fixed interest loan? And was this fixed interest loan was taken up or issued when interest rates were low or when interest rates were high? Because it can create completely different situations. So if nowadays we are taking up a loan in the Eurozone, then the interest rate would be around 2%, 3%. So if we are just using fixed interest loan, that's perfect. we can survive easily. If we had to take up this loan in 2022 or 23 when interest rates were really high, that's a different there. So in this case, for this data, we can here company, markets, and let's see how fast I can find this, because they moved this, so it's supposed to be in fixed. Incomes, yes, it's in loans. And in the loans menu, there's supposed to be the corporate bond. Wow, I was able to find it first approach. So if you are checking the EU, then we have to check always the yield curves or credit curves, doesn't matter. So here we can see that if someone is B rated, then, oh my god, in this case now or today, for a 5-year bond, they have to pay 10% of interest. In the current relatively low interest environment, because now interest rates went back, if you are checking it's double B. At the same time, we can see this is just 4.14%. If we are going to way better A or AAA ratings, then we can see that this is just 3%. So that's why it matters a lot that not just the rating, but also the maturity of this debt. Wow, what happened? Yeah, this is AAA. So for in case of 30 years right now, they can take up loans with nearly zero interest. So this is nice to analyze interest to cash or cash flow to leverage analysis, but also you should check maturity structure of the existing debt. Doesn't matter it's a country or it's a company, still we have to see. And also, what is missing from this analysis? The mismatch in terms of currency. So if we are realizing our revenues in one currency and the debt is denominated in another currency, then depreciation, appreciation can create really high biases, or it can bias completely the profitability of the company. So this is what will be analyzed during the semester, that we should check them, because the book was already obviously written by an American author, so they don't realize that this can be a problem, but around the Eurozone this can be relevant, or even if we are a European company, if we are funding ourselves through US dollar, then it can be also an issue. So that's why we have to dig into this topic as well. And after that, obviously, we have the modifiers. So this is where we can see the capital structure, what I mentioned before, the currency risk of the debt, the maturity profile of the debt, and also the diversification of the company, of having multiple business lines. Are they able to pivot out? What happened with Astra Space, that after they were nearly defaulting and they had to be removed from the stock market and made the public company private again, then they were moving from manufacturing terrible rockets to manufacturing satellites, small satellites, and satellite engines. So they were able to diversify, because at the end of the day, if you have CNC machinery, if you have 3D printers, you can manufacture anything as you want until people are appearing at the workspace. So they could be transferred even into an automotive supplier if this automotive manufacturer requires high quality products. So there is a German company, a rocket factory Augsburg, and most of them were coming from the automotive business, because they are saying that there are not much differences in terms of quality rating when we are thinking about a Ferrari, a Lamborghini, or a rocket. Okay, we will see when they are able to fly, because until now they had some nice tests with static fire tests, and after that it was exploding. But okay, the original version is has this exploding nature in any rockets, but it will be really interesting to see how they can scale up their operations. The other thing is liquidity cycles. So how long can we use our suppliers' money, and how fast are we paid by our customers? So how can we earn our cash? Can we use our suppliers as a special form of short-term lending, or practically can we use them as a bank without realizing it? And also, what are the bank relationships? One of my friends told me that he's working at a relatively big company, and they had a nice amount of deposit at the bank. It just was for storing cash, but it was not cash. I mean, short-term liquidity, but cash-like liquidity. The problem was that the bank completely forgot to pay any kind of an interest. So it was just sitting there, literally like a cash, and we are talking about hundreds of millions. So they were saying that we don't care about it, and okay, he is working at the treasury department, so he was saying that okay, now we would like to have term deposit, an overnight term deposit, with overnight term deposit interest rates. And they were saying that, oh, we don't have such a product and so on, but he was forcing them to do the paperwork one day, second day, third day, and so on. So he was terrorizing them. And suddenly, after a week of terror, they realized that now we have a product for you. Also, he was providing the necessary Excel macros and other things to make this easier, or to generate reports and so on. And literally, they were able to force their bank to focus much more on their corporate partners. So suddenly, they are providing interest on overnight basis on this quite wholesale bank deposit. Also, it can be really strange that some banks are also defining interests on debt on an ad hoc basis. So they were saying that, okay, we have this project loan, and suddenly the interest rates started to increase, and they were not able to define why. They were asking the clerk at the bank that, okay, why is this level? And they were not able to provide answers, so obviously they were firing this bank. Then the next bank was able to tell them that meters behind the loan or behind the interest rate. So the nature of bank relationship, even if it sounds absolutely obvious, sometimes it's not. So the financial sector is a huge mess in many cases. So when people are talking about fintech will be the future, come on, if it would operate as a bank, so if it would operate as a textbook, I mean the already existing financial sector, everybody would be really happy. So right now the sloppy things, the unfulfilled contracts, the unknown variables should be removed, not inventing something new, which will be also sloppy sooner or later. So once I had this personal story that when we were purchasing the flat, obviously with a bank loan, then I needed insurance. And also, if you have a real estate, it's nice to have an insurance. So I went to my usual insurance company, sit down, and we need an insurance. And the lady started to argue with us that we should extend the house's insurance. And I was asking that because it's expensive. I was asking that how expensive is this in terms of money? And she was not able to answer. She was just running in this spiral that it's expensive, we should have this extension. And at some point I have to ask her that, okay, but we would like to have a contract here. And she was giving back the paper. She don't want to deal with us at all. So rejected that. She doesn't want to make a contract for an insurance because she has better ideas for us, because she would like to save money. And come on, guys, this is the financial sector. They should take my money, not giving them away. So after that, I went to my bank because they are also selling insurance, and because I also know that a guy from a long time ago, he was not there, but this is when I was able to get a thesis worker, because the clerk at this bank was looking for a thesis supervisor. He was studying here. So at the end of the day, I was able to get my insurance, and also I was able to get a thesis worker as well. So you never know what will happen to you when you are starting the day. So bank relations and financial relations, they can be highly relevant. So yeah. Also, level of standing in credit markets. So is that if we have any kind of a crisis, the problem is not just with the interest rates that they can rise, but suddenly there is no loan available. Because the problem is that banks are always providing loans when they can see that the collateral behind the loan is marketable. As you learn international finance, that market liquidity is highly relevant. So until the second-hand market of the underlying asset is stable, until there is enough demand for that, then we can get funding through that. If this disappears, then doesn't matter if the asset is high quality. If they are not convinced that they can sell it on the market in case of a default, then there will be no loan at all, or the interest rate will be so high that it's practically the same, that we don't have a loan. So that's why many companies are focusing much more on bond issuance. So if you are a medium size or big enough company, then it's way better not to focus on debt-based funding, but bond-based funding, because in this case you are issuing the bond and you have to deal with only the renewal of the debt when the bond expires, except if it's a continuously amortizing bond, but usually they don't care about this one. Degree of prudence in companies' financial risk management. I think that this is highly obvious. Why do we need this? For low risk assessment. Also, management and governance. So strategic competence and operational effectiveness and ability to manage risk. These are so nice phrases. How can we measure this? Maybe track record, so we can check that what happened with the previous companies, or what happened with the company since then we are working there. But this is so soft. That's why when ESG scoring was announced and developed, I was so happy, because at least, okay, environmental and social doesn't matter, but the governance score can be useful. So we have these scores, green finance and something. This is when I will show you that how can we use at least the G component to determine how banks can be efficient or not efficient. So this is really useful, because we can declare that management is useless or not. Way better than this strategic competence. What is this? What kind of number should I download to get the data about strategic competence? So it looks nice, just doesn't work. And also group and government influence. We can say that in the case of Musk, because he's a group alone, it can issue, or it can have an impact on the company profitability, corporate or government relations. So all the roller coaster, what we can see in the case of Tesla, and also what we cannot see in the case of SpaceX, because this is a private company, but BOD contracts can come and go based on the relationship with the president. So it can be really important to see that who are the core people with strategic influence, because there is a problem. So if you have this guru type of CEO or manager, it can be really useful, because they can provide directions, and after that, when they are setting the strategy, that what kind of at least they are setting the target, that what do we want to achieve within 5 years, 10 years, it's really useful. Because if we have just a useless board of governors or board of managers, the problem will be that they don't want to take risks. They would like to maybe satisfy the investors. It's a good thing, but there will be no growth story. This preference or this behavior can be really useful if already the company is in a settled business, if they just have to collect cash, if they are in a monopolistic situation, then also there are not much technological challenges. So the whole industry is boring. Like, if you are who knows who is the CEO of Coca-Cola? we don't care about it. So Coca-Cola is the most boring company. They are just selling bottled sugared water, but with a nice margin. So at the end of the day, this will generate cash for us. But the rest of the industries or industrial branches are much more sophisticated. So at the end of the day, you need someone who will be brave enough to define objectives, also to know who should be delegated or who should be hired to do the job. So Musk alone is quite useless. So he is maybe a nice guy, just I don't want to work with him or under him. But also after 3 explosions, he realized that he needs an expert. So this is when Winnie Shotwell was hired. She is an excellent engineer. He had a really good track record as an not just as an engineer, but also as a manager. So practically, she is the heart and brain of SpaceX. So when there is a trouble, then she moves there, and after that, this trouble will be settled within several months. So practically, she is the hidden gem behind the company. And in many cases, the problem is that we can find a charismatic leader, but if we don't have the gray eminence in the background who will actually manages the stuff, then we will face problems. Okay, so credit rating. You can read the credit ratings in the lecture notes. What matters is that these ratings are working well. So we can see that if a company is AAA rated today, then they are usually not going to default. So this is Standard & Poor's data. Now it's quite old, but doesn't matter. So we can see the mass of defaults. So only after rated for AAA, so maybe after it was downgraded, but after 7 years, only 2 companies defaulted. And we can see higher default numbers if we are going to higher rating. The problem is with the threshold. So until you are rated at least as BBB, you are in investment grade category. And this is where companies would like to stay, and also countries would like to stay there, because many bond-oriented investment funds or mutual funds or pension funds have this investment policy that they are allowed to purchase only investment grade bonds. So the gap between BBB and BB is really high in terms of risk spreads and any other spreads, or also the volatility of the yields, and that's why the bond prices is way higher in the speculative grades in BB, single B, and triple C. And also the problem is that if any shock happens, then these yields will jump into the sky. By investment grades, they are just sitting there, because if your bonds are purchased by pension funds and their horizon is like 20 years, then they don't care much about short-term changes, short-term shocks on the bond market. So this is a core problem that also many countries are facing, especially Hungary or Romania nowadays. So if you are in BBB, it's a good thing. Just if you are dropping out, then you have to face really, really high problems. Okay, so this is credit rating, but let's see traditional default methods, because nobody cares with this one in the book, while we have to manage a company. So Altman published this scoring method in the late 60s, so 1968. The guy still lives, I think, and he still lives from this one. So that was a good investment for him, because he is still publishing his revised model after 50 years. And we can say that this should be absolutely outdated. So he was calibrating all these things during the 60s for US companies, only for public listed enterprises. But on the other hand, it still works. So somehow he was able to find something which is robust. So there are many, many papers. That was when my wife was making her finance master degree, and I had to support her job, not as a supervisor, just I was at home. And that's why I provided sometimes suggestions. And she was absolutely into the book publishing industry at that time. So there was a scandal. Alexandra was a publishing house, but also mostly they were absolutely into the retail business. So they were selling books in stores. Just the problem was that this market was growing constantly until 2008. And at the peak, they had many, many brick and mortar stores. So they had one, for example, in Szeged, they had one in the Arcade, one in the Plaza, one in the Kara Street, one in Napfény Park, and one more. So they had at least 5 or 6 bookstores just in Szeged. So it was absolutely overexpansion, but also everywhere. And the problem was that they were not buying the books from the vendors. So other publishing houses just practically they were storing the books on the shelves, but their payment was also highly infrequent. And the problem happened, so they started to struggle in 2008, but they were struggling for 5 or 6 years until Christmas, when publishing houses provided the books, and suddenly, after Christmas, no money arrived back to them from Alexandra, because the company was bleeding money. So they had soccer team, they had winery, and so tried many, many things. They were opening cafes within the bookstore. So somehow they were trying to get more clients, but it was absolutely not an oligopolistic market, because only 3 companies or maybe 4 companies existed on this market. So it's a really narrow oligopoly. What we were able to see on a really small market, because Hungarian market is 10 million people. So well, you cannot go cross-border because of language barrier so much. Maybe you can go to Romania, Slovakia, and Serbia, but that's all. So and after that they defaulted badly. So most of the stores were purchased by the concurrent companies, and some of them were closed down immediately, some of them were rebranded. But after that, e-business and e-shops practically killed most of the market, I mean the physical market. So nowadays, okay, you can find bookstores, but mostly you are just going there to get your online delivery. But she was working also with this Altman Z-score, and also after that we were testing it for other purposes. And also when we are checking the literature, there are thousands of papers which are using Altman Z-score, and on many different industries, many different economies. So somehow this is working. Why? Because it's simple. So there are 5 key ratios what should be studied, and in this case we can say that, okay, current assets, current liabilities, obviously this is short-term viability. So this is what we can see, that how money, okay, rough estimation about available cash to total asset. Obviously, if this decreases, then we are facing troubles. Also, retained earnings. This is a really good indicator for financial buffers. If we have more money as retained profit or earnings, then it's good for us. Also, earnings before interest and taxes, how much cash can be earned. So it's also quite obvious. What I don't like is the book value of equity, because in this case it's it can be completely misleading. Okay, we can see that equity to liability is the leverage ratio, so we can see that how much debt are we using, but in this case, you completely forgets the fact that what is, so this one ignores interest payments completely. So it's not so sophisticated. It only has something about leverage, but that's all. And also, this is a problem for private companies, because for private company, book value of equity is completely meaningless if you are comparing it to liabilities. So if you are listed publicly, at least it tells something, but for private companies, it's quite useless. And also sales to total assets, or turnover of operations, also a nice thing. The problem with this Altman Z is obviously that it doesn't provide us any probability of default, so it has this shady range system which says that if the Z is under 1.23%, then we have higher probability of defaulting. Yay! So personally, I don't like this. People prefer this, but we have a better and more sophisticated approach, which is ugly, but better. So this is the Ohlson-O score. It's much better because this was defined with logistic regression. It has way more variable in it, and it provides us a probability of default. So it's really good because we have a probability of between 0 to 100%, how easily or how probable, what is the probability of defaulting. And also, it defines the relative size of the company. So this too big to fail factor is there, that obviously if the company is big enough, then maybe they will be bailed out by government or by something else. So this is one relevant component. On the other hand, we can see that again, total liabilities to total assets is there as a variable. Working capital, so current assets minus current liabilities to total assets is there. So we can see significant changes in terms of variables, just they were using a more sophisticated approach in the 80s, and that's all. But it's way better indicator because we can get a probability. So and nowadays people are way more we prefer to use neural networks. Just the problem with neural network is that it can have an overfitting issue. So you are training it on one sample to provide the probability of default for a set of companies, but but on one hand, it's not transparent. You don't know that which factors were the reason why it was suggesting that, okay, now this company is risky, this company is not so risky. So you have to still work with the neural network a lot to become transparent. So this lack of transparency still provides some market niche for these approaches. But if we are checking the database, and let's go to company, and maybe we should look for a, oh come on, not Apple, anything but Apple. So let's see Airbus. So this is private or publicly listed company in oh my god, nowadays we have so many things here. Okay, these are the recommendations, but for investments, not. Yeah, no. Yes. But we should have also the rating. Yeah, so if you are right, or do you want to write your thesis in relation with any kind of ESG topic, corporate related topic, financial topic, and so on, we can help you with this database. Just unfortunately, we have only one access point from that, but at least we have this one because it's quite expensive. And ownership. Yes. Rating. Yeah, so as you can see, ratings are provided for each of their bonds and securities. So, and also by different, so some of them will be provided by Standard & Poor's, so one rating agency. Some of them are provided by another rating agency like Moody's. Also, they have different ratings. Structure for rating for short-term and long-term debt. So this ABCD rating is only valid for long-term debt. So with higher maturity than 1 year. Otherwise, they are just using this P structure. And but in the past, we had also a nice rating for the whole company. Yeah, CDS. Oh, I nearly forgot about you. Okay. Because we have to mention CDS at this point. So, CDS should be a good thing. Until it was not. And also I was able to find issuer rating, so we can see that Fitch provided A, S&P provided also an A. I don't know what is this VR, but CDS. So credit default swap is a really strange contract. It behaves like insurance. So you have to pay a regular fee to the issuer of the CDS. Monthly fee, annual fee, whatever. And in the case of the default of the company or default of the bond, then you will get a payment. Usually, not 100% of the capital of the bond, so there is always some kind of a recovery rate because we can assume that not 100% of the capital will be lost, just maybe 90% or 80%. So if the compensation of the recovery rate, you can get the payment, and in this case you can practically insure against the default. The problem is that you can buy CDS without the ownership of the underlying bond. So I can buy CDS without buying US government bonds or Hungarian government bonds or whatever, so they are not connected at all. So that's why CDS can be completely misleading, because in practice CDS pricing are defining market mood. So it's a really good indicator for psychology on the market. Are they greedy? Are they afraid of something? Because this is what moves CDS around, but CDS never captures the actual probability of default. So this is when we have to be really careful, because CDS prices cannot increase because maybe another company in the same industry defaulted, or when Greece was really close to defaulting in 2014 because Greek politicians were completely crazy. They did not want it to accept the requirements from the EU and the IMF, and they were waiting until IMFs were drying up of money and the banking system were nearly collapsing when they realized that, okay, maybe we are increasing the VAT from 21 to 23%. And now they have to collect also the 10% luxury taxes on private islands and jets and boats. So usually in such a situation, so when Greek politicians were idiots, also in case of the Hungarian CDSs, we were able to see that also CDS prices were increasing, but okay, we can see also nice things for Hungarian politicians, but their level of knowledge and level of sophistication were not changing overnight, which would suggest a sudden increase in CDS prices. So it was completely a contagious effect that they were afraid of one market, so they were checking the next market. So that's why CDS is a good product. We can use it for things, but you should not take it too seriously. Because the other problem is that if we are checking the numbers somewhere, so to define CDS pricing, you need probability of default. But this probability of default is calculated from already existing CDSs. So the whole pricing of the CDS products are circular. You are picking data from the existing market and then you are using it for your own. So that's why we can have, let's say, 20-25% probability of default for government bonds with a maturity of 20 years. But this is a mathematical artifact, not because of fundamentals in the country. So again, the interpretation of the data can be absolutely misleading. If you are reading something like this in the journals or in a paper, when they are saying that, oh my God, the CDS prices are increasing, so that's why we have to be afraid of a default in this industry or that industry. No, right now the market is afraid of this. But maybe nothing happened with the industry, or maybe something happened with the industry, just some specific cases, some specific companies, some specific countries, but we should be, again, conservative in terms of our reaction. And combined credit risk. Oh yes, this is what I was. So I wanted to show you this one at the beginning, just now I was able to find it. So this is Refinitive's own rating, and in this case we can see that they are using also text mining model. So not just looking for structural ratios or something which would define the company, but also they are also mining all the news, all the data which is coming in forms of text. Nowadays there are really good vocabularies which would not just provide some kind of an idea about what is happening in the text, but also with artificial intelligence, also you can mine for the context, which was missing 10 years ago. So nowadays we can also look for the context. We had an excellent master thesis in this program in summer, because the thesis worker was processing all the communications of a central bank about inflation, reports about inflation, and then she was able to connect this textual data to market reactions. So how surprised was the market or how wasn't? So if you are interested in such a topic, then András London in the other building can help you, because on the other hand, nowadays there are completely standardized toolboxes are available in Python or in R, so you can do it relatively easily. So after working several days with it, you don't have to invent anything, just work with that one. And yeah. But still, we can see that, okay, in the case of ratios, still profitability, leverage, coverage, so all the interest payments and other things are still considered liquidity, growth and stability. So this stuff is still there, what I showed you in case of Altman-Z or Ohlson-O. Just now they are adding the new things coming from big data. And also in case of publicly listed companies, we have asset volatility, asset drift, so other market-related variables can be included, because obviously market is not efficient, completely efficient or highly efficient, but still a lot of information is already building up into the data, so that's why we can see that how things are reacting in case of pricing. And yeah, and also competition is also rated here, so we can compare them, but it is what matters. If you are interested in default probabilities and how can we deal with this topic, or do you want to write a thesis or TDK or student scientific contest, then I recommend to walk into office 209, so my neighbor, and this is where Tundi Santo, she is working on this topic, so this is her thesis topic as a PhD student, so she is way better in this topic than me. I just am an enthusiast, and sometimes helping her, but yeah, so she is the expert. Okay, so that's all for today, and in the case of CoSpace, I can give you also the